Let's first please acquire some perspective. NVIDIA's stock is still up 108% for the year after reporting a strong quarter. Did you know that the S&P 500's top performance is still that? It's no little accomplishment either. As the $638 billion company, I bet you were unaware of its size, has seen a roughly 23% increase in stock price so far this year. What is causing their shares to eventually roll over then? Due to a recent unfavorable narrative about AI. We are aware that the hyperscalers, those massive corporations sometimes referred to as the Magnificent Seven, have been making significant investments in AI technology. Many people now view NVIDIA's relative underperformance as suggesting that they're spending too much and that it's not sustainable. However, NVIDIA itself, which lately became the focal point of tech negativity, was the true motivator. How bad is it? Okay, I'm just making this stuff up. Today, I heard a debate over how long we will be haunted by the NVIDIA share bear market. The bear market, even though it was down almost 30 points from its peak, they somehow failed to highlight that this stock is still the S&P 500's best-performing stock so far this year. What took place to revive this dormant stock? It's instructive to observe the movements of equities such as NVIDIA, Broadcom, or even JP Morgan. Vice President Harris's position on carbon emissions during last night's debate may have contributed to the visceral positive movement in the alternative energy stocks, making it dangerous to conclude otherwise than that they are struggling to produce at scale. That makes perfect sense. However, the issue has essentially been resolved. It is a supply issue rather than a demand issue. Demand is soaring. Last but not least, there are others who fear that we are on the verge of a recession, which could affect various electronic devices and affect the semis. However, an easing cycle will support the economy, and the Fed is set to lower interest rates next week. Goodbye. Additionally, we received an incredibly positive report from Oracle this very evening. Many of the positive developments coincided with the establishment of AI data centers. Well, not too awful. I believe that the semiconductor stocks have ultimately fallen off far too quickly. We still like this group for all the reasons we did earlier this year. The rise in AI spending is real. Oracle told us this evening that a significant amount of money is being invested to expand the infrastructure. More significantly, chips are not just about AI. The semiconductor sector has been experiencing oversupply for the last few quarters, and now we're finally witnessing some outstanding sales growth. Yes, we are moving upward and have passed the point of equilibrium. In July, the semis experienced sequential sales gain for the fourth consecutive month. As we emerge from a supply glut, do you really want to leave this group? We are entering one. You ought to do it. We should wait for the hot money to come out of that one. Even though I would love to pound the table from NVIDIA, before the stock truly plummets, too many sunny patriots and summer soldiers, thanks Thomas Paine, need to raise the white flag. Today, I heard it described as a no man's land. That's nice. Additionally, among the other chip makers, you could discover greater reductions than NVIDIA. AMD predicted $2 billion in sales for 2024 when it announced the MI300 last December. They increased the expectation of product sales to $3.5 billion in late January. They increased it to $4 billion at the end of April. They raised it to $4.5 billion in July, the most recent time. For heaven's sake, what does the market want? All things considered, AMD's most recent quarter was quite successful. With better-than-expected projections for the current quarter, modest sales and profitability beat expectations. The announcement caused the stock to rise 4%. I was correct, but it was just before the market as a whole was destroyed by the collapse of the yen carry trade. People seem to have forgotten about that fantastic quarter. You claim that there isn't an AI bubble. Compared to the previous major tech bubble, at least, 52 times forward profits in 2000 is one of the comparisons you made. 24 times now. Net income margin, 28% presently, 16% back then. Where can you find worth? At what point do you say, all right, for now, when do they get cheap enough for you? That would allow people who aren't in them to potentially start establishing a position. Yes, I agree that you should have a list of businesses that you hope to own in the future. As a result, NVIDIA is 25% lower than its 52-week peak. To put that valuation into perspective, Charles, it is currently trading at a forward P/E that is more than 36 times. They produce the most cutting-edge chips and are the largest and greatest chip maker in the world. Compared to Chip Pavel, which makes burritos, they are selling at a lower valuation. Okay, so I'm happy you said NVIDIA since it's at the epicenter, isn't it? It is the storm's eye. The pace is set by NVIDIA. The problem is that several well-known billionaire investors have recently sold. 9 million shares were sold by Ken Griffin. 3 million shares were sold by David Tepper. 1.5 million shares were sold by Druckenmiller. These are the biggest, sharpest people in the world, Steve Cohen. NVIDIA is now the dumb money play, according to the narrative on Wall Street. To that, how would you respond? I would be curious to see what proportion of their portfolios were invested in NVIDIA. Are they only taking some gains and cutting profits there? The Oracle narrative and the company's recent recovery intrigue me greatly. The hyperscalers and NVIDIA's tools have been presented to you. Software has had difficulties. This collaboration with AWS is what we've seen with Oracle's report last night and the subsequent rebound. They are stating that the customer can continue to use the Oracle platform and software in the background, regardless of the hyperscaler they select. You've observed a really robust revenue stream. That, in my opinion, is just more proof that the AI narrative is still in its early to mid-stage stages. Yes, indeed. To tell the truth, I think it's fantastic that it's expanding beyond picks and shovels. Hopefully, I also have Oracle subscribers. In any case, my next guest advises choosing the obvious option. He is still optimistic about NVIDIA, a company he believes has enormous potential. John Porter is now joining us. At Newton Investment Management, he serves as the Chief Investment Officer. John, the chip company is cyclical and experiences cycles. The debate, I believe, boils down to whether or not you believe NVIDIA will face one of the several setbacks the sector frequently encounters. Chris Grandy made this claim the other day, arguing that it can perhaps circumvent some of the historical cyclical difficulties the sector has faced. Yes, Kelly, you have a valid question. Additionally, there are undoubtedly certain cyclical challenges to consider. I mean, there are a lot of cyclical headwinds in the semiconductor industry right now if you look outside of AI. However, sometimes it's beneficial to take a step back and look at the big picture. As investors, we frequently complicate stories beyond what is necessary, and occasionally we simply need to concentrate on the clear-cut narrative. Regarding NVIDIA, I examine the current state of artificial intelligence. You heard what Oracle and many others had to say last night. I firmly believe that artificial intelligence is a game-changing technology. It will take some time for the use cases to develop, but yes, there are some questions. However, this technology will be revolutionary. Infrastructure is something you must invest in. As part of that infrastructure expansion to enable AI, NVIDIA is unquestionably the most significant and well-positioned firm. Additionally, NVIDIA is currently trading at 30 times the earnings for the upcoming 12 months. This isn't a bubble stock, you know. Given how frequently it is discussed, one would assume that it is. That isn't a bubble, though. At 30 times earnings, it's one of the biggest underweights in mutual fund holdings, if you look at them. Despite all of the excitement and attention that NVIDIA has received over the past few years, I just believe that the risk-reward ratio is highly appealing today. That's intriguing, because it may be the loan community. It is underweight in the mutual fund industry. I wanted to bring up the topic of market capitalization once more. Remember when it was a $3 trillion business? You could have predicted that the shares would double from here, but will the company truly be worth $6 trillion? Still, it is $2.6 trillion. As a result, several investors stated, well, I might lose 40% of my money, so I don't want to stay for a 10% or 20% gain. I would like to attend the double. Can the market value of this corporation reach $5 trillion? It's difficult to say. Nothing would be excluded, in my opinion. Kelly, I believe that's a really